Hello and welcome to this very special conversation. We are bringing to you Sarbvir Singh, who's the CEO at PolicyBazaar.com, and we are going to talk about something which is of great concern to all of us in these times, and which is our health. COVID-19 has made all of us scared, wary about what's really going on. At the same time, it's also made us think about what we can do to protect ourselves, both physically, from a health perspective, as well as financially, around the costs that are involved in a treatment of COVID, if in the eventuality that you were to contract the virus. And the costs can be fairly significant. Of course, they vary from hospital to hospital. So how can you really protect yourself financially if something like this were to hit home? COVID is hitting home. It's coming closer and closer to our homes. Sarbvir, my first question to you, though we've got a lot of questions already from our viewers and we are going to try and take all of them.
Sure.
Now that the cases are rapidly increasing, how is health insurance as a sector coping with these higher rates of claims that are probably being made?
So hi Vivek and hi everyone who's listening. I think the health insurance industry is actually coping quite well so far. I think the regulator has played a major part in making sure that everyone is prepared, setting the guidelines, expectations, etc. very clearly upfront. That cases have to be considered on priority and have to be handled. I think the insurers have also stepped up. The whole issue around consumables, which I'm sure we'll talk about. But many of them have voluntarily taken the step to cover consumables, which can be a large part of the cost. And I think the industry is doing cashless claims, is doing reimbursing on soft copies, etc. So I would say all in all that the industry is well prepared, both from a regulatory and industry perspective, and is handling the situation quite admirably so far.
We've got hundreds of questions, Sarbvir. Does that indicate that people, according to you, are more aware or becoming more aware about health insurance? Traditionally, we've not been a society which has taken health insurance very seriously. Do you think COVID-19 is changing that?
Yeah, absolutely, Vivek. I think what has happened is that this is obviously a huge shock, to society at large, not just in India, but globally. And I think in India, what has happened is that more and more people have realized the importance of insuring themselves. Because, one of the challenges is that we all talk of the average claim in COVID. Some people say, let's say around 1 lakh or 1.5 lakhs. But, the average can mislead as much as it informs, because in many cases, the claims have been much higher. And for those people, obviously, that is a major blow to their financial health. So I think people are now understanding why health insurance is important and why you need to protect yourself from unforeseen events. And COVID, of course, is a poster child for being an unforeseen event. So it's definitely something that has created a lot more awareness and demand for health insurance.
Let's dive straight into some of the questions that we've got, Sarbvir. And one question which resonates probably with a lot of people, and in fact, Amir Khan, Jignesh Shah, Ravi Vallabheneni and Rajiv Grover have asked this question, that does a regular health plan cover COVID treatment?
Yeah, so the answer to that is very unequivocal. All regular health plans cover hospitalization, and any COVID-related hospitalization is covered by all health plans. So anybody who has a health insurance policy, has COVID coverage. There are some differences though, that some insurers cover all consumables, that are used, and in some cases they cover only a part of it, and in some cases they don't cover it. So that depends on the individual policy that you have. But COVID as a disease is covered by everybody.
Okay, so here's another question, which is coming in from Jagmohan and Anil Chadda. And that pertains to, for senior citizens, they're saying, asking what are the good health plans for senior citizens 60 plus years with zero co-payment?
Sure. So I think there are several options in that. Senior citizen plans, as I'm sure the question people who ask the question know, tend to be a little bit more expensive. they could look at Max Bupa has a health companion, HDFC Ergo Health has Optima Restore, and then HDFC Ergo has Suraksha. All these three plans don't have copay. There are other plans like Red Carpet by Star and Religare, which have copay, which are also options. But since they specifically asked for without copay, the first three would be good options.
So somebody who's above 60 years can get health insurance, because there's a myth,
Yes.
once you cross a certain age, you won't get health insurance.
No, it's a good question, Vivek. Absolutely, people above 60 can get health insurance. And the only point is that they have to be very careful that they declare very clearly what are their existing conditions, if any, what medications they are on, so that if a claim arises, then they are not there are no confusion about it, and it's very clear what is permissible and what is not. So each of these policies will have a waiting period for certain pre-existing diseases. But outside of that, everything is covered. And what is good also is that many of these plans offer coverage without having to do a physical medical. So you can get these policies also on a telemedical, where a doctor will speak to you, ask you about your various conditions, and ask various questions. And based on that, the policy is issued. So actually, at this point, this is available to people above 60 as well.
Okay. Here's a question coming from Saurabh Saxena. And his question is, can I convert my existing health insurance policy to a 1 crore cover policy? I think this is very interesting, Sarbvir. That means people are getting more and more aware of the need to have a higher cover. And when we last spoke, you talked about the importance of having a much higher cover, not just 5 lakh, 10 lakh, but even a crore. Those who already have an existing policy of say 5, 10, 15 lakh, can they transfer it to a 1 crore cover, or do you have to buy a new cover?
So Vivek, I think now with more and more insurance companies coming out with a 1 crore cover, portability, essentially when you transfer from one policy to another, it's called portability. So portability is now allowed by Max and by Religare. So both are options to move from your policy to a 1 crore policy. Both work slightly differently. Religare is a full 1 crore cover. So if you are, let's say today you have 5 lakhs or 10 lakhs, sum insured, then you would be able to carry all your benefits with you. So if you've already served your waiting period, etc., your waiting period would be waived for the Religare policy. In the case of Max, the continuity would be only up to 5 lakhs because the Max policy is a 5 lakh standard policy and a 95 lakh top up. So you'll get the waiver, etc., will be up to 5 lakhs. And then, of course, the coverage will be there for the entire 1 crore sum insured that you have.
Okay, so we're getting some live questions in as well. Let's take some of them also, Sarbvir. One is coming in from Edhos, whose question is how to ensure that my claim is not rejected.
It's a very good question, actually. It's a simple question, but a very good question. I think the single biggest favor that you can do to yourself is to make sure that you have made all declarations upfront when you buy a policy. So the good news is that almost all conditions that are there are ways to mitigate those. So some could have a waiting period. You may have to wait for 2 years or up to 4 years even, but most conditions get covered eventually. So the biggest problem with the claim that happens normally is that you have not declared something, and when the matter is investigated, it comes out that you had a pre-existing condition, which then causes problems. So I would urge everybody to declare before they buy their policy, and to be fully aware of the the conditions of your policy, because that can sometimes lead to misunderstandings over how much money you will get. So for instance, if there is a room rent capping and you go from, let's say, double room to a single room, so then not only will the room rent differential have to be paid by you, but typically all the services also get marked up. So that differential also you have to pay. So I think for claims not to be rejected, two important points. First, be very open and transparent when you buy the policy. And secondly, be very aware of what, the rules are of your particular policy.
Okay. Rahul has a question. Rahul Sen, he has a question. Can we buy a policy which covers me and my family too?
Yeah, absolutely, Rahul. So these are called floaters, family floaters, which are very common form of policies now, where you can cover yourself, your kids, in some cases your parents also. Although in some cases it is better for you to separate your parents and your family, because parents will be senior citizens and they may have different restrictions and requirements. But absolutely, it's possible to buy a family policy. The main advantage of this is that the entire sum insured can be used by any of the family members. So it's like a pool which can be divided between the family members, and hence, you don't need to really buy for each individual.
There's Akshat Kansal who has another question related to this. Can a family floater also be ported to another insurer? You made the point earlier about porting and portability. Can that happen also with a family floater?
Yes, absolutely. A family floater can also be ported. The rules are the same, that the waiting period, etc., that you have served, they go with you, so you don't need to reserve those waiting periods. And the sum insured that you have gets carried over to the to the new policy.
Okay. There's another question also from Aidhos. Is there a major limitation of super top-up plans apart from deductible limits?
In general, super top-up plans don't have any other limitations. I mean, in the sense that they work on the basis that whatever is the first part, let's say if it's a first 5 lakhs or whatever, will not be paid by that. But beyond that, they cover everything. And in general, they tend to cover all. There aren't any more limitations. There are always some tweaks, so every policy should be studied. But in general, super top-ups are a very good way to increase cover and to provide protection for the sort of very high health, big health issue.
Right. There's a question from Hitesh Balwani. What is the difference between HDFC Life and HDFC Ergo? That's an easy one, Hitesh. HDFC Life and HDFC Ergo both are owned by the HDFC Group. HDFC Life is a life insurance company. So yes, life insurance companies also offer health benefits through critical illness riders. HDFC Ergo is a general insurance company and has a health insurance arm as well. Is that correct? Have I managed to answer it properly, Sarbvir?
Yeah, of course, Vivek, you're an expert on this. As you correctly said, HDFC Life. So they have life insurers are allowed to offer health plans, but they are not indemnity plans. They are fixed benefit plans, which means that they will give you a certain amount of money if an illness is triggered. Indemnity plans will cover the cost of hospitalization, which are right now only offered by health and general insurance companies.
All right. So here's a question coming from Roja Sahu. The question is, how much minimum insurance for a family of 4 members should be bought?
Yeah, so I think, Saroja, that's a great question. I think the rule of thumb, it depends on where you live. So if you live in the metro areas, there the hospitals and care tend to be more expensive. So what we feel is that a good rule of thumb is that you should buy about 10 lakhs per adult, in the family. What is interesting these days is that if you look at a 20 lakh cover, that you'll find that the 1 crore cover products that are in the market actually are cost roughly the same as a 15 or 20 lakh cover. So it makes absolute sense to go for a 1 crore cover, depending, of course, on what your budget is and how much you want to spend. So if you can, I would say that this is a good time to buy a 1 crore cover. Otherwise, of course, I would say 10 lakhs for a family would be a good number.
Okay, here's a question coming in from Kuldeep Singh. His question is, how does health insurance cover life insurance as well? That's a simple answer. No, it doesn't, Kuldeep. It doesn't cover life insurance. However, as Sarbvir explained, you can, through a life insurance company, buy a life insurance cover and get critical illness health riders on it, right?
Yes, absolutely, Vivek. So you can, there are critical illness riders which cover, things like cancer, etc. Which again, there's a list of illnesses which are covered and which vary to some extent by company. But those would pay you a fixed sum if any of those diseases were to happen to you. That's how it works in the life insurance side.
Right. Ravi G has a counter question on your earlier comment about 1 crore covers. He asks, does a 1 crore cover, is it cashless?
Yes, absolutely, Ravi. So as you know, for every insurer has a network of cashless hospitals. So if you go to any of those hospitals, it will be whether the sum insured is 5 lakhs or 1 crore or whatever. It is a cashless policy. For outside the network, there may be a reimbursement that will be required.
There's another question from Rahul Sen. He wants to know whether health insurance covers the accident expense. Like, let's say if I am hospitalized due to an accident, so is the health insurance cover, will it cover the expense or not?
Absolutely. Accidents are covered from day one in all policies. So if there was any accident that you were to unfortunately meet, you would be covered if you have a health insurance policy.
Here's an interesting question from Pavan Gangadhar. He says, nowadays, term insurance is becoming very popular and famous. What's the difference between term insurance and a normal health insurance? Which is better?
So I think, Pavan, maybe I'll just take a few seconds to explain the difference. Term insurance essentially covers the mortality risk, which means that if you were to die, and it is essentially more a loss of income product. So the idea is that your family is dependent upon your income for their for their well-being and financial needs. So if the salary earner is not there, then you need money to replace that. So term insurance should be taken as a function of your income and your household expenses. We typically suggest 10 to 20 times your annual income is what you should be covered for, so that your family is secure. Health insurance, on the other hand, covers any kind of disease or accidents, as we just discussed, that may happen to you on the health side. And these are two different sort of covers. And what we suggest to people is that you should have both. You should have a health insurance because, as we know, health related expenses can be very big. And secondly, you should have term insurance because if anything were to happen to you, then your family would be able to maintain their lifestyle.
Here's a question from Tosi Sheikh. His question is, I've purchased a health insurance plan from Policy Bazaar from Max Life of 1 crore rupees. Would it cover all illnesses? Not sure if he means Max Life or Max Bupa, but if he's a health cover, then I'm presuming it's Max Bupa he's referring to.
Yeah, Vivek. So I think if it's Max Life, then he probably might have a critical illness rider or something, in which case the policy would only cover and pay off in the cases of those critical illnesses that are specified in the policy. If he has a 1 crore cover from Max Bupa, then all illnesses would be covered, and this policy would work in all instances.
Right. Here's a question from KVN Krishna. Can you please elaborate on Arogya Sanjeevani policy, and is it a good policy compared to market leading policies?
So Arogya Sanjeevani is a policy which has been introduced by the regulator. The good part about Arogya Sanjeevani is that it's a standard policy. So everything has been very clearly laid down by the regulator, and it is available. So the only difference across companies is the price at which it's offered. In terms of comparison, I think the main point which you should consider is that Arogya Sanjeevani has a copay. So initially there was a 5 lakh limit on some insured, which has now been relaxed. So now insurance companies can offer as much as they want. So from a consumer perspective, the thing to watch out for is that you would have to, there is a copay in Arogya Sanjeevani, whereas most of the market leading plans do not have copay in the retail, in the consumer context. So I think that is the choice you have to make. You will find perhaps that Arogya Sanjeevani might be a little cheaper to buy in some cases as compared to the best market plans. But then, if there is an illness, you will have to pay from your pocket some part of it. So that's the trade-off that you'll have to make.
Here's another interesting question, which is coming in from Rahul Sen. He says, is there any policy that covers cancer?
So yeah, I mean, as long as it's not a pre-existing condition, then if you were to unfortunately contract cancer, then health insurance policies would cover that as well. And that's really one of those use cases where a 1 crore policy can come really in handy, because as you know, in cancer, the amount of money that you may end up spending can be really, really large depending on what happens. Cancer is also covered in the critical illness riders from life insurance companies, which tend to pay off, depending on the amount that you bought the rider for. If you were to get cancer, you get that money upfront from them. So cancer is covered in both cases.
So two interesting questions around critical illness riders that you talked about. One question is, let me just go back to it. One question was that should we take a critical illness rider from a life insurance policy or through a health insurance policy?
So I think the best way to think about that is that if you have a health insurance policy of high sum insured, so let's say if you have 30 lakhs or 1 crore health insurance policy, then perhaps having a critical illness rider is not that important. Because what will happen is that the health insurance policy will cover this, these critical illnesses as well. Now, however, if you have a smaller health policy, like the sum insured of, let's say, a few lakhs or say 5 lakhs, then it would make sense to have a critical illness rider, because then when you do have that critical illness whose expense will be probably more than 5 lakhs, then that policy would pay off and you would benefit from that.
Here's a question from Aman. While there are a host of options available for customers for IPD products benefits, there is hardly anything on OPD benefits. The limited options are very pricey. Any thoughts around this?
That's correct. OPD in general is harder in the Indian context. So there are some policies, and I think this will be an area of innovation in the next, I would say, coming quarters, coming years. So you will find some better policies in this area. But at this point, I agree with you that while there are some OPD covers in the market, they tend to be expensive, and they may or may not be as suitable.
Okay. Here's a question from Amit Sharma. His question is, does health insurance provide coverage for consumables items during hospitalization? You made the point earlier about consumables, so if you could elaborate on that.
Sure. So in general, consumables are not covered. So if you notice, whenever you have to make a health claim, you'll find that there will be small deductions which are made, and they typically are for consumables like gloves or gauze or bandage or something like that. Now, however, what has happened with COVID, because the healthcare workers and doctors have to wear the protection equipment all the time, and that is a significant cost. So different companies have taken on different approaches to this. Some of the companies are paying full amount for the consumables, so you have to check the policy that you are buying. Some pay up to a limit, like they may have a limit of say 2,000 rupees or 3,000 rupees per day that they would pay for consumables, and in some rare cases they may not pay for consumables. So consumables, the best way to think about it is that insurance companies are not obliged to pay for them, but given the severity with COVID, most insurance companies are paying for them, some fully and some in a slightly capped manner.
Okay, here's a question from Yashpal Mehta. His question is, I am 69 years old and my wife is 65. What are our options?
Yeah, so Yashpal, we discussed a few policies which you can get without a copay, which is Max Bupa has Health Companion, HDFC Ergo Health has Optima Restore, and HDFC Ergo has Suraksha. Then Star has a very popular red carpet plan, and so does Religare has a plan as well for senior citizens. The last two have copay. So I think the factors that you have to consider are, what are the existing conditions that you have, what is the price that it comes to without copay, and then what is the price that it comes to with copay. So obviously with copay it will be a bit cheaper than without copay, and depending on your budget you can then take a decision which way you want to go.
Here's a question from Navdeep Patel. Is a policy issued by a bank can you port a policy issued by a bank, I think is what he means.
Yeah, I think the answer depends on what kind of policy it is, Navdeep. Many times banks sell what are called group policies. So these are not retail policies. These are group policies which are sold by banks and are meant only for the customers of that particular bank. These tend to be, sometimes these can be a little bit cheaper than normal retail policies. So people get attracted to them. But the problem with them is that, one is that they can't always be ported, especially to a retail policy. And number two problem with them is that their prices can change every year, which in a retail environment, the regulator has certain rules and restrictions on how prices change. So depending on, I don't know your particular case, but if it's a group policy, then portability will be difficult. But if it's a normal retail policy, then portability is allowed.
Okay, here's a question also coming in from somebody who's above 50 years. What are the best medical insurance plans for somebody who's above 50 years? From Prasad, I think you've already answered that. Prem has this question. What should be the considerations for choosing a plan during COVID?
Yeah, I mean, the answer is actually quite boring. The consideration should be exactly the same as they would be without COVID, which means that you should look at the maximum sum insured that your budget allows you. You should look at things like room rent capping, waiting periods, any sublimits that the policy may have. So there are 3 or 4 criteria that you would look at in selecting a policy. And at this point, I think those same criteria would apply to looking at it even in the COVID environment.
Hmm. Here's a question coming in from Nina. What about special plans like diabetes health plan? Can it be processed for portability? Right now it's 5 lakh. I want to get to a 1 crore cover.
Yes, Nina, the diabetes, if you have diabetes, and depending on the plan that you bought, you can port from those plans as well. From 5 lakhs to 1 crore, as I explained, the waiting period, etc., will get carried with you. So if you've served some part of it, that you don't have to start again. There are 2 options right now: max, where you will get a 5 lakh sum insured from a portability and a sublimit perspective, and religare, which would allow you to cover all the way up to 1 crore. So I think in your case, probably what you're looking for is porting to religare.
Here's a question from Vishal Navlani. His question is, please explain in detail some of the best ways to reduce the hospital bill so that insurance pays less amount and loading is minimal on renewal.
Yeah, so Vivek, I think this is a bit of a myth, perhaps carried over from motor insurance, that, if you make a claim in health insurance, then next year your renewal premium goes up. So actually, this is not allowed explicitly by law. So what happens is that there are no individual loading that can be done. So health insurers are allowed to look at their book over 3-5 year periods, and of course they do change their prices. But for an individual, there is absolutely no impact whether you make a claim in a particular year or you don't. The only impact is that the 10% or 20% no claim bonus that you would get from the insurance company, which gets added to your sum insured in most cases, that you won't get. So actually, there are really no real sort of economies that you need to exercise should you unfortunately need to be in hospital.
There's an interesting question from Naresh. After taking a new policy in this time, after how many days will COVID-19 be covered? 30 days, is it?
So Vivek, now there are policies like the one from Edelweiss, which covers COVID from day one. Their Star has created an exception where they cover COVID from the 15th day. In general, you're absolutely right. After 30 days, COVID would be covered in all policies.
Okay. Here's a question coming in from Nilesh. If we buy a new specific COVID healthcare policy, then you get admitted for COVID if you get admitted for COVID, but during the treatment due to other comorbid conditions, other treatment is required, then in such cases, will the above policy cover the entire treatment?
Yeah, so the way these things work is that as long as the doctor makes the determination that whatever your comorbidities are have been triggered by COVID, then the entire matter would be treated as COVID and it would get reimbursed. Of course, if it becomes that those two are unrelated, then you would not get covered with your COVID policy.
But that you're talking about a specific COVID policy or your overall health cover as well?
No, I thought the question was around the person having a specific
right. Yes, absolutely. You're right. Yeah.
This is only valid if you have a COVID only policy. If you have a general health policy, then of course COVID and any other conditions will be covered.
Depending on whether you have an exclusion or not, anything which is included.
Right. Sorry. Yes, absolutely. So if there are any waiting periods, any exclusions, etc., those would be applied. Sure. But you would get coverage just like any other.
What's a good health policy for a 21-year-old? This question comes from Vivek, not Vivek. It's really nice to get a question like this, a 21-year-old thinking about health insurance. And we keep saying, Sarbvir, for many years now, get your insurance early, get your health insurance at a much earlier age, much more smoother the process for you, lesser premiums to pay. Easy, no exclusions in most of the cases for a 21-year-old. So what would you advise Vivek to do?
Yeah, so I think clearly all Viveks are smart. So I think Vivek is on the right track. I think this is really good that he has the awareness to start thinking about health insurance. Actually, at 21, everything is great. So you'll find that almost all policies will be very easy for you to get. You should, if your budget allows, go for a 1 crore cover so that, you are already in a policy which has a large sum insured. and very soon all your waiting periods, etc., will get over. So I think, yeah, I mean, actually, you have a choice of all leading insurers have very good policies for people at that age. Typically, obviously, there are no pre-existing diseases, etc. So it's actually a very smooth. I mean, you could literally get your policy in like 30 minutes.
Two questions coming up. Saurav Kumar Jas has a question. We see that all health insurance companies are providing health insurance at different premium rates. Sometimes it is seen that one company is providing a cover of 15 to 25 lakh rupees at a yearly premium of the same amount, where another company is providing cover of a huge amount at the same premium. Is it believable?
Yeah, I think, Saurav, I can understand your question from a consumer perspective. I think obviously there are differences across companies. The key differences tend to be around what is allowed and what is not allowed. And I'll just list out the sort of key criteria that tend to be there. One is, room rent, like as to what kind of rooms are allowed. So the more expensive the policy, typically you'll have allowed higher and higher categories of rooms. Second thing is sublimits. So the cheaper policies will tend to have sublimits and say that, look, if you have diabetes, we'll only cover up to X, amount. And while the overall policy may be 5 lakhs or whatever, the more expensive policies will not have sublimits. The third area which you should always look at is the claims ratio that of the insurer. Some insurers tend to be relatively, I would say, generous in paying claims, and then sometimes in those cases their policies tend to be more expensive, whereas some insurers are very strict in terms of paying claims, and in which case their policies would be cheaper. The final point is around waiting periods. So if the waiting periods for pre-existing diseases are lower, then the policies tend to be more expensive, and if the waiting periods are higher, then the policies tend to be cheaper. So, combination of these 3, 4, 5 factors decides the, cost of the policy. So I would suggest that you look at the policy points in detail and then decide, depending on your situation, how much you want to spend and, what kind of company you want to get covered by.
Okay, here's a very product specific question. So up to you, Sarbvir, if you want to take it. Swapnil Raut has this question. I found that there is a new policy provided by Star Health called Young Star. Can you explain it in brief, as I think it's not mentioned on the Policy Bazaar portal? So again, if you want to take it.
No, I can. So first, it is now on our portal. We have been selling Young Star now for a few weeks or more. It is a good policy, as you would expect from the name, for younger people. It has only a 1 year waiting period for pre-existing diseases, but they've covered that by only offering it to younger people. So if you're say less than 40 or 35, I think this could be a policy that you could look at.
Here's an interesting question from Pankaj Gulati. His question is, should one go for a super top-up or port to a 1 crore health cover when trying to raise the sum insured?
It's an interesting question. I think practically speaking, both are good options. A super top-up might prove to be more economical from a cost perspective. The advantage of the 1 crore would be that all your pre-existing diseases, etc., and waiting periods would then be covered all the way up to 1 crore. Whereas with the super top-up, they would only be covered up to the base sum insured. So it's something that you can look at depending on your situation. Both are relatively good ways to go, because if you get a claim, even with a super top-up, the entire claim would get covered between the two policies. In the case of 1 crore, of course, one policy would cover it.
Okay, here's a question from Ken Krishna again. Do you see daily cash benefit health insurance more beneficial than conventional health insurance that typically doesn't cover consumables? Can this daily cash be chosen as add-on in traditional insurance?
So, as I explained, it's not, most of the leading insurance companies are covering consumables. So that is not particularly a difference between the two policies at this point. I think ideally, I think having an indemnity policy which covers the cost of hospitalization is a better way to go than having a cash benefit policy. But depending on the situation. So for instance, let's say if you have some existing health insurance coverage and you want extra coverage for COVID, then buying a fixed benefit policy which pays cash per day could be a good way to go. So both have, there are some advantages in getting cash also. But in general, I feel that it is better to go for a full indemnity policy and only use the cash benefit as a top up if you already have some existing policy.
All right, that's all the time we have in this particular edition. But Sarbvir, it was great talking to you. Thank you for taking all the questions, lots of questions, as you can see, and I can't imagine what people are going through right now. We live in difficult times, but thanks very much for all the good work that you've done through this crisis. As I understand, I think a lot of claims have been cleared, all in a cashless new policies. I think there's a lot of innovations that have happened also, Sarbvir, during this period, that you can actually now buy a policy in a completely digital, seamless manner with even your telemedicals and video medicals rather than going and getting coverage. Hopefully, these will all become the norm as we go further on and good practices. So thank you very much, Sarbvir. Pleasure, as always, talking to you. Thank you.
Thank you, Vivek, and thanks for the kind words.
Thank you.